It'll help with that. Let's bring in Jen and the Money Men, Executive Vice President of the Commonwealth Foundation, Jennifer Stefano, Business and Markets Analyst and NewsMax contributor, Seth Denson, and America's Accountant, Professor Dan Geltrude. Guys, the gang's all back together. Good morning.
Hey,
Morning.
good to be
Happy
here.
to see my co-panelists.
Yes. All right, guys, let's just jump right into this with the markets like we always do. The Dow Jones slipping again at the end of trading yesterday, losing another 129 points. S&P was mostly flat. NASDAQ pulled out the only win this morning. Futures are up, but just barely. Seth, so much market volatility this week. Should investors be taking advantage of the roller coaster and buying stock?
Yeah, I think if investors want to do that, they need to be very well educated and versed on where the buys are, right? I mean, listen, if you're in the market, this may be a good time to be looking at re-diversifying or reallocating. But there are still buys to be out there. I'm looking at some. One this morning's catching my eyes, Pinterest, right? And my wife loves it. And, you know, I have to admit I've been on there a few times myself. They're down 60% year to date, but guess what? They're profitable. They've got upside because of the user capability, and they don't do politics. So people may be escaping there soon. So nonetheless, I think there are good buys that are out there. You just need to know what they are. This is the time to be looking at a company's balance sheet and upside. And if those are there, you might be able to get a good deal.
Jennifer, your thoughts?
Yeah, I think the next couple of weeks and months into March until the Feds actually raise rates, it's going to be very volatile. But I think I'll take advice from Warren Buffett because I think he's smarter than I on stocks. And his philosophy is, look, slow and steady wins the race. Lose your 401k password, forget the login. If you have a solid dollar cost averaging plan, a strategy, right, where you put the same amount of money in every month, whether it's high, whether it's low, and you're invested generally in funds that follow the indices, then that is what's going to get you through these very volatile times. I think the wealthiest investor at the end of all this is going to be the disciplined investor. And that's something I think people aren't really feeling right now. There's a lot of emotion attached to this and looking for the right thing to do. Actually, doing nothing could be what saves you.
Well, Dan told us earlier this week, do not be emotional. All right, next up, the Federal Reserve holding short-term interest rates steady, signaling its intentions to raise them in about 2 months. The goal, to put out the inflation fire that's spreading across the United States. Dan, is this going to get worse before it gets better?
It probably will, unfortunately. Look, here's where we are with this. The greatest threat to the U.S. economy is with inflation, which means that whatever steps need to be carried out is what probably will happen, one of which is raising the federal interest rates. Here's the problem. We should have never gotten to this point. What we've seen here is from our policymakers in Washington, they have not done the proper things to get inflation under control. Why? Because they actually don't understand the basics of economics 101 with supply and demand. So what they've done is they've punted this problem to the Fed and said, okay, you raise the interest rates. That'll be what solves the problem. That's a dangerous place to go.
All right, let's talk a little Tesla. They are cruising down the highway, racking up a record annual profit of $5.5 billion, but warning that supply chain disruptions could last through the end of the year. Jen, can Elon Musk be stopped?
Well, possibly. There's always a competitor somewhere ready to disrupt everything. Elon Musk was one of them. But I think they just released their new futuristic truck. I don't know if you saw it. I absolutely love it. For once, there's a car on the road that doesn't look like every other car on the road. It's very modern, very futuristic. But I think the supply chain problems are the issue. Electric car takes about 2,000 chips to operate. That's double the average car. And these costs are what are driving not only the cost of cars, but really impacting the whole supply chain and inflation. So I think this is going to be problematic to get these vehicles on the road, but it's already for a wealthier buyer. So I don't think they themselves are unused to waiting. It's the people, that we have to go out and buy a used Hyundai that are kind of getting squeezed here.
All right, guys, there's so many other topics I really wanted to get in with you guys, but Jen, Seth, Dan, Jen, and the Money Men, as always, thank you so much for coming on.
Thank you for having us.
All right, guys.